Hey folks, welcome to Pro Trader Strategies. My name is Eric Wilkinson and this is Spotting the Trade. Yeah, I'm flying in here a little bit unannounced. Usually I'm going to be going on in about a half an hour, but I've got a lot of trades that are popping off right now, so I wanted to jump on here just to make sure you guys are a part of this as we're talking about it. I don't want to be hindsight is 2020 here. So let's get on with the economic data. It is going to be a busy week, folks, for economic data. Even starting today, we usually don't get economic data on a Monday, but we even have a couple of Fed governors speaking. Global Fed governors are speaking this week, so that is going to be a lot of talk in the news, so keep your eyes out for that. That's going to be monetary policy moving forward and everything else. That's something that we are going to be hyper focused on, at least going into the end of the year. When is this taper going to happen, or is it even going to happen this year? But keep your eyes out for the Fed governor speaking, and also Powell, but global guys as well. Those are the FOMC guys here in the United States all day long. We're going to be hearing from them, and the week for that matter, and they will be meeting up throughout the week as well. But economic data here in the United States, we got our durable goods orders. Now, remember, durable goods are products that are going to last longer than a year. That number coming in higher at 1.8%. Now, remember, that's including autos. So this number really being driven by the autos. 1.8 expected to be 1.7, revised last month's number up a little bit. Now, we're hearing all kinds of fodder about supply chain forward, like trucks, F-150, because of the chip shortage. Folks, people are trying to get cars. Remember, we've been seeing Uber, Lyft struggle because folks aren't wanting to jump in a car where somebody else has been, right? They kind of want to get back to the ownership of that car. I talked about that since the pandemic. We're seeing those levers and pulleys start to work. Plus, it's not as cheap to take an Uber and a Lyft as it used to be. What used to cost me about $15, $20 with tip, well, that is at least $30 to $40 now. Same trip, different pricing. Now, strip out those automobiles for core durable goods. We got 0.2%, that's lower than the expected 0.5. So autos, that's what I'm talking about, really driving that number there today for the durable goods orders. All right, so without further ado, let's get on with sharing the charts here. We've got crude oil up here. Now, crude oil is moving higher into the 70s. Looks like it might be lockstep here. Something that's pushing crude oil higher here, folks, is the North Sea has shut down. What do I mean by that? Well, Great Britain, the UK have built massive wind farms around the North Sea or throughout the North Sea. Well, the winds have slowed to a point where those aren't generating electricity. So demand for other energy drivers, crude oil, natural gas, all making moves higher today as these natural resources are going to be what folks are going to need in the wintertime if the fans aren't blowing there. All right, I'm going to move my chart to the bigger one. So we're going to see crude oil continue to move higher. Bonds, something here, notes dipped it above 150. Now, something to note here, we're looking at bonds, and you're like, bonds are going down. What's he talking about, 150? Well, notes and bonds, what we're talking about here is when you have the notes and the bonds, for some reason, what is that? Oh, it popped up for a second there. Let's try it again. You're going to hear a lot of talk about the notes, which is the 10-year, and the bonds, which is the 30-year. And what we're seeing here when we get the interest rates moving, so I hope you folks have all refinanced. As a matter of fact, a friend of mine who owns a finance or a mortgage company is refinancing himself now. So when you see the finance guys refinancing, that might be the catalyst to get you guys out there to refinance as well. Anyway, so when we see bonds coming off, so as bond prices goes down, which is what we're seeing, as the price goes down, you can look at this as if it's like a teeter-totter here. And as bond prices go down, what that is telling us is that the interest rates are going higher, all right? So as bond prices go down, the interest rates are going higher. Today, we saw the 10-year go above 1.5%, which is something we haven't seen in quite some time. So Interest rates look like they're going to start creeping there. I've been talking about the Fed and the pulling back on asset purchases, folks. I don't think that they're going to be pulling back on asset purchases really anytime soon. One thing before you guys go, make sure you guys smash that like button, feed those bots, send it out there to find somebody like you. All right. If any of this information, something like this, is a light bulb moment, please share that light bulb moment with somebody else. Also, if you guys want me to comment, or if you guys want to comment over there, feel free throughout this video. I will be keeping my eye on that if you guys want to comment there. All right, gold futures. Now, a little bit of struggle here. Still seeing elevated volatility across the board in the gold miners. I think it's an opportunity to take advantage of here. We'll talk about my trades in gold. I had a bit of a fat finger error. So if you guys want to learn about my fat finger error, stick around a little bit longer. And if not, make sure you hit that subscribe button. Folks, make sure you hit that bell too, because these morning spot the trades, I come on when I find those trades. Yeah, we have it scheduled. I'm probably not going to go on later than 11:30 Eastern, but if I find something earlier on, I'm going to pop in here early. So make sure you got that little bell lit up over there on the side next to the subscribe. All right. So gold, I think gold is going to continue to migrate back up into the 1800s. Yeah, we're right there at 1750. That is a bit of a support area for psychological. You can see it acted as a support and resistance. We've got a bit of a volume node there. So that is a comfort area, but I think that we're going to start pushing higher here, especially if we start seeing inflationary numbers throughout this week. And keep in mind, we are going to have more PCE this week. Remember, we've been talking about this, watching the flow of money from the CPI, Consumer Price Index, down to the PPI, all the way down to the PCE, which is personal consumption expenditures. That's you and I as a retail person, not necessarily adding in some of the service sector guys, all right? So that's going to be an important inflationary gauge for you and I. Are they able to pass those higher prices all the way down to us, all right? So we're going to keep our eyes out for that. Bitcoin is making a little bit of a move higher here, but again, I've talked about this. I think it's going to stay right here in and around this 48,000 area for the foreseeable future. I think that if you're looking for upside or volatility, you should be looking into Ether there. All right, VIX is cruising a little bit higher here because we're seeing some weakness. Are we building out this shoulder? It sure looks like it to me. The head and shoulders looks like we are coming into fruition. A rollover, breaking below the neckline would be something folks are going to be looking for. So like I was talking about last week, keep your eyes out for this chart setup. And we are talking about, we got a head or a shoulder here. We've got the head, and now we're building on another shoulder. Here's the neckline right there. Market would be looking to break below that to fulfill that setup. That's a pretty bearish setup at the top of a move, folks. So we're going to be watching that as it starts forming up. Folks on TV will be talking about it too. We've been talking about it since it was early, setting up on this bounce on that neckline. So hopefully that you guys are ahead of that game. Yeah, we talked about it within Dow Jones that this really isn't a very good head and shoulders setup. It's very messy. One might say that the big head is there building out a shoulder here. But I think that what we're going to see here, if we get a correction with this head and shoulders setup in the NASDAQ and in the E-mini S&Ps, that the Dow Jones will actually hold on to some of its value as folks are pulling out of the higher volatility stocks and go into something a little bit more like the Dow Jones, where it's been lagging a bit on at least valuations to the upside here. Dow Jones, like we said there, doesn't really have the head and shoulders that we're seeing here. Again, in the E-mini S&Ps, neckline's a little bit slanted more to the downside on this one, so it's not a beautiful setup like we'd like to see. But again, a shoulder here, we got the head and building out another shoulder as we're pumping up against the 161 Fibonacci extension here, folks. Well, that is going to act as resistance. It acted as a bit of a support here when we were coming down, but now it's going to act as that resistance to the upside, which will allow us to build out that shoulder. Now, a settlement above that, it's going to start breaking down that pattern, but the pattern is still intact until we break above, 5450. Or sorry, 40. dyslexia, 45.50. All right, E-mini S&P is overnight. We're trying to figure this out. It's about when I woke up, came in here just to check on the markets, and we just started seeing a free fall for the most part throughout the day. Now, no real recovery, but overnight is very short, and there's nothing I can really see that was making this weakness other than the fact that the market started waking up here in the United States and the selling pressure came back. All right, well, with that said, some of the Dow Jones holding on to that value. I talked about this. Caterpillar was getting beat up for a while there. I didn't really understand it. Volatility was expanding here. So that was the time to take advantage of high volatility. When a market just drops here, maybe based on the Delta variant, China cutting back on some of their mining. I fade all of that. There is a bit of a China slowing, but their energy is produced from mining. Their coal and everything else is driving that economy. They aren't going to pull back on mining operations. All right. So with that said, I jumped on this trade to play Caterpillar to the upside. And if I got stuck with Caterpillar, I'd be happy to be long Caterpillar at around the 170 level. So when we were looking at this on the, what was it? I think it was like the 21st here, was right around here. We got this bottoming. We got the high volatility. Now we talk about this with volatility, folks, that we want to take advantage of it when volatility is at extreme levels. Why? Because we know if we look over there in the option montage, the Greeks, Vega is implied volatility. And the rule for Vega is for every 1 percentage point increase, that corresponding coefficient will either add in on an uptick or subtract out on a downtick. So when we get these downticks like this in the volatility, basically in this one, we lost about, I'm going to call it around 5-6 ticks in that. Well, the volatility coefficient on this trade is around 3 or 4. So we can see that we lost at least 20 cents out of that trade just by the volatility coming out. So volatility coming out. And yes, when you're selling puts down here at the 170 level, which is what we were looking at, we were doing the September, actually it was the October. We're into October. 170 puts that I originally sold in there on those 170 puts for Caterpillar. I originally sold those for 157. I bought them back for 42 cents this morning. So all of that was based on, I did finally get the directional move, but this volatility coming out quite dramatically allowed me to get out for a little bit better than 50% of my max profit. It was closer to 50% max profit on Friday, but I knew coming into today, we'd get a little bit more volatility, that theta really working in my favor because I go into the October. That's where that theta really starts ramping up. So we're trying to get all of these things in our wheelhouse here. High volatility, we want to start selling premiums. All right. We're not selling premiums when they're super cheap. That's when we need to look to buy them. And I lay out all these guidelines in my webinars that I do on Thursdays after the close. So please go check those out, sign up, or hit that bell over there. That way it'll give you a reminder when I pop in here on those webinars or unannounced for a trade that I'm doing. You guys can take advantage of jumping on here with me for a few moments and comment over there. If you guys want me to cover a stock that you're looking at, I'd be happy to throw it up here on a chart and start drilling down on that little thing there. All right. So Caterpillar got out of this trade for a nice little profit there. And then also in Wynn, squeezed it out for a little bit more of a profit than what I'm normally looking for here. Squeezed things out for a little bit better than 50% of max profit because we got in on the weekend here. Again, on this bottoming pattern, I tried to get in a little bit earlier than the volatility started adding into it a little bit. You can't, folks, always get the extreme high volatility. Sometimes it does creep a little bit higher. The idea here, though, is with my guidelines is to try and to turn the tables into your favor. And one of the ways that we do that is when we have extreme volatility, and I talk about my thresholds there for selling premium or buying premium. In this case, it was a prime opportunity to sell premium because it allows us to get further away from where the underlying's trading and collect a nice premium. I talk about the specific deltas that you guys can look for when you're trading these underlyings as well. So please check out those videos because I just don't have the time to go through all of those guidelines to set up a specific trade. I try to talk about them a little bit in here though for you. All right, so with Wynn, again, played this to the upside. I'm leaving in my Las Vegas Sands. I did add Las Vegas Sands at around the same time as we did with this Wynn because we got that high volatility spike due to the Macau shutdown and China trying to really beat up on them about steering people away from gaming operations. I mean, can you imagine Vegas not having lights and bells and whistles? Well, at the end of the day, when we got down to this 80 level, it's discounted Macau altogether. Like, it's not even happening. So great opportunity to get long in something like Wynn or Las Vegas Sands as far as I'm concerned. Yes, they do have a lot of exposure there. It is a bit of a risk, but this is priced in without that being around. So in the Wynn trade here, I again went into the October. I just wanted to check my price on the Caterpillar was 157 that I sold, bought them back for 140 here. And in the Wynn, I went into the October 75 puts, trying to get that theta decay. When we got that high volatility, October is the month that we were looking for this high theta decay. So October, going in and selling the 75 puts, allowing me to get down here around this little volume node. It is near those lows. Come on, folks. That's the pandemic lows basically still there before we started coming out of that. I don't think we're going to see that kind of angst anymore. So we did get tested a little bit, got involved. It did go against us a little bit. But again, we're getting that volatility coming out. So as that volatility comes out, even if it's going against me a little bit, they're going to be offsetting kind of as the market goes against me, those deltas are going to hurt. But if the volatility is coming out, that's going to offset all of those things there. So selling those 150, selling the 75 puts here and Wynn for $1.80. I was able to get those back out today for 84 cents. So a little bit better than 50% of max profit, which is usually the guideline I'm shooting for in selling options. We try and get in those relatively high volatility. And then when that volatility comes out, you get a bit of a pop, try and cover those for 50% of max profit. Just get in and out. We're looking to do the jabs here, all right? Small ball, all right? Singles, doubles, and triples. That's what I'm looking for anyway. If any of this is, striking a chord with you guys and think somebody else might want to hear something like this, make sure you smash that like button, feed those bots for me, and comment. I'm happy to go over anything you guys are looking at over there on the side before we shut down here, and I will circle back around just in case you guys come late to the party here. All right, where is this at now? I think I just lost my pin. All right. And then Wynn, Caterpillar, I think Caterpillar and, the fat finger, folks. I was looking at gold and then going back and forth. Gold, GDX, you guys know I'm already in the junior gold miners. GDXJ is the junior gold miners ETF. GDX is the major gold miners. Well, the volatility's already come out in this, but we do have a nice little bottoming pattern here. I talk about that in webinars, videos. Anytime we get one of these nice little spinning top dojis down here at the bottom of the move, confirmation today, that's giving you that signal of a swing trade to the upside. But wasn't getting that high volatility, whereas over here in GDX, we are still seeing elevated volatility. It spiked a little bit. So I actually was going in here, playing around with it, looking for different opportunities, and was checking the pricing on my GDX. And instead of clicking get rid of the trade or delete, I basically hit send or cancel, send, I hit send. So I added some more October 38 puts short there at 59 cents in here, but we are getting a little bit of a bounce. Volatility is not quite where I want, folks, but I want to talk about all of the trades, the good, bad, and the ugly, when, where, and why I'm putting them on. Well, I put this one on, when, where, and why. Well, why? Because I did a fat finger there when I was messing around in my platform, but we're going to talk about it anyway, because It's real life. That's what happens here. All right. So before you go, make sure you smash that like button for me. Subscribe, hit the bell over there so you get a notification. I came on unannounced today, a little bit early. I still am about 5 minutes early for that video, but I wanted to talk about these trades as they were popping off because I was getting out of my Wynn and Caterpillar. And let's talk about the fat finger as well. I'm not too embarrassed yet. All right, we'll see how it goes though. All of those are the things that I've done so far. So pretty busy for a start of a Monday. All right, that's all I got. One last thing though for you. One last thing for you. If you can't take that, take it easy.